Good afternoon. You're with Business Lunch. 85.58 now on the Nifty. We're approaching close to that 85.50 odd mark. In fact, we had breached that low of 85.55, which was the March 13 low, down about 4.5%. Anuj is here with us. Anuj, what do you make of this fresh mayhem today?
Yes, I think it's, me and Lata were discussing yesterday that markets normally go back and test the previous bottom, but we didn't know that it would happen in 2 days.
And we were hoping it would be protected, that
yes.
it will put up a fight.
Yes.
But the fight has not even lasted 24 hours.
Yeah, it hasn't. And
or whatever, 5 hours.
Look, there are two problems for the market, like we've been discussing. The biggest problem is the global cues. Once again, European markets, the US futures, everything indicating today Kospi is down 5%. So we are falling in line with the rest of the world as far as the Nifty is concerned. Additionally, there's another 3%, 4% pressure on the bank Nifty, which is because of this, this trust factor that I keep talking about right now on the financial system, and the way, stocks like IndusInd don't fall 35% after already having fallen 60-65%.
Anuj,
and
let me interrupt you in that.
Let's just complete.
Even Bandhan is down 24%.
Yes, so Bandhan is down. Axis is down about 11% right now. Kotak is down 10%. Bajaj Finserv, Bajaj Finance, HDFC Bank is down about 6.5%. So, there's one set of stocks which is clearly IndusInd Bank, RBL Bank, though RBL hasn't fallen much today compared to the others. But that's the weaker set of stocks where the market believes that there's some problem, for right or wrong. But today what you've seen, and even Federal Bank is joining in. And most of the stocks, by the way, which, the problem right now is stocks like Federal, where they put money in Yes Bank, they are falling because they put money in Yes Bank. IndusInd falling because, the RBI didn't consider them good enough to, invest in Yes Bank. So it's a bit of a mess here right now, globally as well. We've now broken 8,555. Now let's see if this level holds, because there's any kind of intraday short covering. But right now, indications were clear in the morning itself when Nifty futures opened at that huge discount, despite the market opening with a gap up. And even now, as we speak, the Nifty futures still trading at a 70-point discount. This is actually getting a bit maddening right now. This is no way perhaps representative of the real value of a lot of stocks. But that's what the market does, both on the upside and on the downside.
No, we are trying to ascribe causes for things that are falling. But I mean, why would you have an IndusInd, Bandhan Bank, IndusInd and Bandhan Bank both falling about 25%? Equitas Federal down about 13 to 16%. Axis, Kotak both are down 10%. I mean, this is like, I don't know if, we can call it any more a trust factor or a distrust factor. This is someone wanting to get out of financials.
Yeah.
They don't deserve 40% of anybody's portfolio. And therefore, we are clearing out.
Yeah.
And you don't have a buyer. So the seller is ready to get at any price that he's able to find a tick.
Exactly. And what we used to think, whether this is just a correction or start of some kind of bear phase, I think this is globally looking like a bit of a bear phase, and that's why you're seeing this decline. Also, just looking at the F&O space, there are hardly any gainers left now, except for a Yes Bank and a Z Entertainment. There's hardly any gainer left now, and like Lata was pointing out, even Bandhan Bank now joining. Look at Indiabulls Housing Finance, intraday chart of Indiabulls Housing Finance. I think this is one stock which was holding on in the green in the morning, and now it's the third top loser in the F&O market. Just pull out the chart. I think in the cash, perhaps, there it is. Just in the last 5 or 10 minutes, it's seen a sharp decline. So a lot of these stocks are now seeing decline.
Yeah, quite clearly wanting to get out of financials. That's it. Someone's made up their mind, or many funds have made up their mind. We don't want financials. Actually, the stocks that have fallen the least, like Nifty Metal, that's down 3%. I mean, that is the best performing index. And another very well performing index, Nifty Pharma, down 0.75%. So, no place to hide. It's just that some are more savagely sold off than others. Back to you, Sumaira, the other key headlines of the day.
Yeah, so let's get to that in just a bit. Of course, there is the AGR judgment and the Supreme Court order on it, and it was quite harsh, actually. The Supreme Court judge has said that, telcos will have to clear all dues. There is absolutely no question of self-assessment. They'll have to pay the interest as well as the penalty as far as those dues are concerned. So that's the other big story that we've been tracking through the day today. And my colleague Ashmit, who was at the Supreme Court, who heard out this judgment, joins in with the very latest. Ashmit.
Well, yet another AGR hearing and yet another day of high drama in the Apex Court. The bench headed by Justice Arun Mishra today tore into the telcos, tore into the conduct of the DOT, in fact coming down severely, using extremely sharp language, extremely pointed language being used to target not just the telcos but also the DOT. It's essentially the grouse being expressed by the Justice Arun Mishra led bench essentially is the scope for reassessment that had been allowed by the DOT. This they said was a fraud being committed on the court, on the judgment, that this was the grossest form of contempt, that the figures in question regarding the interest, regarding the penalty, regarding the principal amount was confirmed first by the CAG, then by the Apex Court, and that there is no question of, in fact, going back on that. In fact, the Supreme Court also said that the telcos looking to conduct self-assessment is a fraud on the court, that in fact the DOT is assisting this fraud, and that the Apex Court cannot be party to this fraud. In fact, the Apex Court also pointed the question to the DOT as to why just a few months back they had been rallying hammer and tongs behind seeking both the principal interest and the penalty, and now they appear to have done a U-turn by allowing self-assessment. So extremely sharp language being used. The Supreme Court said that this demeans the language, the prestige of the Apex Court, and with that a formal order being passed that as far as self-assessment is concerned, there can be no two ways about it. No self-assessment, no reassessment. The figure, as per the 24th October judgment of the Supreme Court, stands. Those are the figures that will remain. However, on the question of a 20-year formula, there the Apex Court appeared to be a bit lenient and said that we will consider that question. We will not dismiss it outright. We will consider it 2 weeks hence. So clearly the big takeaways essentially are strong language being used. The Supreme Court pointing out that the MDs themselves will be personally liable for the conduct of the telcos, that no question of self-assessment, and that the question of the 20-year formula to be considered 2 weeks hence.
Well, a quick look at the markets again, because there has been a tad bit of recovery from the low point of the day. In fact, Nifty Bank is 400 points off the day's low now, and the Nifty itself is almost 88 points off the day's low. So there is a tad bit of buying that's perhaps happening on that day. But as of now, we're tracking the markets, and that continues to be the key story. But talking about the telecom sector again, let's listen in to the experts on what they make of the Supreme Court judgment.
This is the worst fear coming true. Given the situation of at least one of the operators, it seems very difficult how will they garner such a huge amount of cash to meet this obligation. When there are only two players left in the market, then the cost of infrastructure goes up. But I think the ones who need to worry the most are actually the customers, because the quality of service that you gets compromised.
I'm happy with the judgment, because at least something which is wrong going on has not been allowed to. As far as AGR dues are concerned, which are long pending for the last 50 years, definitely they are supposed to pay. It's a public money, and it has got to be paid, and government should recover from it. There is no reason. If the government wants to give relief, a lot of things can be done so that financial viability of the industry improves and people start investing in the industry.
Well, it's very, very volatile for the market. From the dips, we have seen a tad bit of recovery, but that too is selling off a tad bit. Anuj, what is your sense? Is this recovery sustainable, or is it just a dead cat bounce that we talk about?
Look, nobody knows, Anisha. All I can say is that, you would have been too young, but we've seen the 2008 phase. So things do happen, and they do happen like this in markets. Rallies get sold into, and when they get sold into, like the saying, the market takes steps or staircase on the way up and elevator on the way down. So this is the market taking an elevator. Next set of staircase will come on the way up. But this top that the market has made will be there for some time. Let nobody be under any illusion that the market is straight away going back there. The point that we need to discuss here is that where does this market stop falling? First of all, that's the important part. There are a lot of people trying to preempt that, okay, it will stop at 9,500 or it will stop at 9,000. Now people are saying it will stop at 8,500. We don't know. Nobody knows. So let it stop falling. From wherever it stops, it will make some kind of basing formation. Stocks will fall to reasonable, mouth-watering valuations. I remember Vallabh Bhansali's comment, 2008 Lehman crisis, when he went on air and said,
March 9th. It was the morning of March 9th,
yes,
and the Sensex, not Nifty,
Well,
had gone to
7,000 something, 7,000 something, and Vallabh Bhansali came on air and said these are mouth-watering levels. Of course,
And that day the markets listened.
On that day, it didn't look like that, but the market, after that gave. But the only problem here is that in 2008 we had a sharp fall and then things were done. Here, it's just protracted. Every day, you're seeing you had that last Thursday, then Friday, and then there's one day of recovery, and once again the market seeing this decline. And global markets, Dow Jones falling or rallying 1,000 points, 2,000 points, in certain cases 3,000 points in a day is not something that a lot of people can take.
It's the age of algo, so things are also happening with exponential speed. But Anuj, I'm just looking at those world meters which look at coronavirus numbers. See, they're increasing by 10,000 a day. So, we had 182,000 yesterday when I came into the markets discussion. Now it is 198,000. And the day before, it was at 165,000 or thereabouts. So, it is important to note that the number of cases getting cured are also increasing by about 5,000. So, it's not fatality. It's not fatal as a disease. But it's just that the longer it extends. Now, for instance, Australia just about 2 hours ago advised its citizens not to travel, which means Australians are not going to come to IPL. Yet look at the number of businesses that get cancelled because of that.
Exactly.
The economic activity that will be lost when something as massive as IPL doesn't happen.
Remember the start had happened when it was, I think,
when
last
the football
Thursday,
matches,
when the sport event NBA postponed the season. French Open has been postponed to September. Post the US Open. So, when sporting events start to get cancelled or postponed, that's when it hits you that it's going. But, once again, we come back to the same point. Okay, I take this point that for next 3 to 6 months, there's going to be a bit of a dislocation. But is this going to be a one-year impact or is this going to be a recurring impact? What the market is doing, and I think someone was making this point, I think it was Sanjeev Prasad or someone I read, and I think it was a very nice point which was being made. Right now, what the market is doing is, it's pricing in as if the EPS damages are permanent, in certain cases. For example, a Jubilant Food or a PVR or, some of these banks or some of these airline companies. Okay, airline is a different case altogether. Here survival is an issue. But for a lot of these companies, the market is pricing in as if these EPS damages are permanent. Now, that is where the opportunity perhaps lies. Yes, there's going to be 1 year hit or 3 month hit or 6 month hit on a lot of companies on the EPSs, but the point that you have to figure out is at what point does this become, a great buying opportunity. I think it already is in a lot of companies, and going forward, it will be, these are phases. Right now, it's fear, so nobody will talk about any kind of buying. But, 1 year down the line, perhaps we will look at that as some kind of buying opportunity.
2 points over there, Anuj. This excessive fall is because we have now become an ETF world. Therefore, once you've got, it's an algo trade which decides the ETF has to move out, then the ETF moves out lock, stock and barrel from gem countries. It's not even selling India, it's not even selling IndusInd, it's not even selling Jubilant, it's selling gem countries. So when an ETF moves out of a gem, emerging market group countries, then everyone, it takes everyone. And just to add to what you were speaking about, the economic downturn, there are some people who will not be able to withstand a short-term liquidity crunch. Someone not paying their bills for 90 days or 180 days. Those people are permanently out of business. So all this falls on the financial system, whether it is pizza guys or whether it is IPL, someone supplying sports kits to an IPL or organizing tour operators, taxi operators for
lot of MSMEs,
they can go permanently out of business, and that falls on finance. So my sense is that those who are rushing to the exit in finance are doing it with that sense that damage anywhere is going to be damage to finance.
Oh yes, the issue with algos is they work both ways. So it worked on the upside, it's working on the downside. Now, who is to say this won't work on the upside? But these kind of price damages, I think, I remember people saying that 2008 happened, it will never happen again. What we now know is, don't say it won't happen again in financial market.
Right.
Things happen. Lightning does strike twice. I think it's done that.
Yes, absolutely. Okay, well, we are taking it away from the other news of the day. Business Lunch is on. Back to you, Anisha and Sumaira.
Right, thanks guys. The market continues to be the top focus, but let's talk about some of the exposure that banks have to telecom sector and how much. Anisha has done some quick math on that. Anisha, which are the big, what are the big numbers there?
Well, all the banks are falling in trade today, and a lot of them are perhaps on account of this telecom exposure, apart from the COVID-19 impact that we just talked about. Now, in terms of the banks which have the highest exposure, IndusInd tops the chart because as a part of its book, it has a 4.4 exposure to the telecom sector with a number of 9,100 odd crores. HDFC Bank has a tad bit of low exposure at 2.6%, but the absolute number is still high, 24,300 crores. Yes Bank had been having an outstanding run in the earlier part of the week. Now it's coming under pressure because their exposure to the telecom sector is around 3.65%. SBI in terms of absolute number is 42,400 odd crores, and Kotak Mahindra Bank and Axis also have an exposure of over 2%. Of course, this is the exposure to entire telecom space, and this is in no way to say that the entire book will come under pressure, but just to tell you, this is the exposure that all of these banks have to the telecom sector. Now, talking about the banks having specific exposure to Vodafone Idea, because in the telecom sector, that is the weakest link, and that is the worrying point for the market right now. Their SBI and PNB are pretty well placed because their exposure is less than 1%. It is the likes of Yes Bank, IndusInd, etc., which will see a bigger impact because they have exposure of around 1.5 to 2%. And the largest exposure there, Samira, is of IDFC, which is an exposure of 3% to Vodafone Idea. So that is something that we need to keep on our radar. And these are the stocks which have been moving around throughout the day as well. So we'll keep tracking that. But of course, the top stories continues to be market. Yes, there has been a tad bit of recovery. Nifty is now trading around that 8,600 mark. We have again slipped below the 8,600 mark. But remember, the day's low was around 8,520. We had breached below that 8,555 mark that we had seen on Friday. Nifty Bank, of course, the cut had been around 18.5%. From there, we have bounced back almost 1%, and now the cut is around 1,670. But it is overall the weakness in the markets, the advanced decline ratio firmly favoring the declines. There are 7 stocks declining for every 1 stock advancing. In fact, Nigel has also done some analysis as far as markets are concerned. So maybe we can go across to Nigel as well on that. Nigel, over to you.
Well, that's right.